Hello and welcome to another episode of Market Maker Mondays. First one for a while. Thank you very much for your patience. I'm going to take you straight into the US 500, and I'm actually recording this at a completely different time. So the markets are in fact still open. It is 7:30 Friday, the 18th of November. And this is how the price action looked at the end of last week. So what I wanted to do really is add a bit of context to what I'm about to go through. And I'm going to break down the week's trading and also how that lines up with the sentiment on the daily and the weekly, where we are on the monthly. And without further ado, let me bring the Discord channel up. So in the description and also in the about page on my, or the about tab on my YouTube channel, there's actually a link where you can access this. And it's if you want to actually use the ICT concepts, you want to build on those, then this is a fantastic place to be. So on the 11th of November, which was actually exactly 7 days ago, I shared this image here. So you can see that this image is basically what we're currently looking at here, but with lipstick on. And what I called out is the fact that I like that we've got this bearish daily fair value gap here with the mean threshold, which also overlap with this large bearish order block mean threshold here. So I'm going to walk you through that. So we've got this here for your daily bearish fair value gap. And then I use the parallel channel for my mean threshold tool, which gives me exactly 50%. Okay, so we've got this key level here. And then I'm also going to draw in another parallel channel from the open close prices, and it overlaps 100%, so you can see that ghost line, but as we actually get that there, it overlaps 100%. Perfect. So I saw that as major confluence. And if we have a look on the monthly time frame, but bearing in mind you'll see the current month as it is, we've also got this monthly fair value gap here. So we're currently trading within this monthly fair value gap. And on the monthly time frame, we have this swing high to this swing low, so we know exactly what our dealing range is. And this confluence area actually puts us into a premium within that dealing range. So go back to the monthly. There we go. So we've got the extent of that lipstick. So we actually had a really strong week last week where we traded to the upside. And if I bring up the previous week, there we go. So we've actually created this down candle, which is now a bullish order block. So on this particular on this particular indices and this instrument, the US 500, we're actually trading within this tight range of this down candle. So this is a premium PD array, and this is actually a discount PD array. So we are due to expect some consolidation here. The momentum is definitely to the upside at the start of the week, or at least the narrative from last week going into the week that's just finished trading, because we had all this momentum. However, you also need to consider what all the retailers are going to think. The retail traders are going to be thinking, well, this was a bullish engulfing candle. Oh, that's it now, we're going to the moon. So I had that in mind at the beginning of my trading week, and I used that sentiment, basically that buyer failure, within my analysis. So going into the daily time frame, we also had just a small continuation higher nearing this key level here. So to me, this was always going to be a potential reversal zone. So I just said that I like how the 50% mean threshold of the bearish order block aligns exactly with the 50% mean threshold of the daily bearish fair value gap, as I've outlined there. And then we had a bit of backwards and forwards. And then we also had a look at the NASDAQ. So the NASDAQ, we were doing pretty much the same, trading up into that monthly fair value gap. And what I highlighted there is the fact that these lows look way too clean. So we're coming back up into a premium in order to induce sell side liquidity, and I am definitely expecting within the next week or two to have a continuation to the downside. And then I shared some struggles with my broker, so I've actually since changed broker because of the manipulation here. And if you join the group and head on over here, you will actually see this in a bit more detail. And then on the 16th of November, a couple of days ago, I actually highlighted this price action, which was actually the 1 hour time frame, again on the US 500. And what that was actually indicating is you've got a short-term high here, an intermediate term high here, and another short-term high here, which is basically a retail head and shoulders pattern. So where we've actually got the right shoulder here, as soon as on the 1 hour time frame we have a confirmed lower high, which is indicated by a short-term swing high, the 1, 2, 3 swing candle here, we can expect lower prices. And that price action is actually covered in episode 12 of the 2022 ICT Mentorship. So I was just drawing people's attention to that. And then also that I like this for sell side liquidity here. So within all of that confluence here, we'd also got the big figure number, which I've got highlighted here, 4,000. And then I dropped a video yesterday just highlighting some of the price action that I was actually taking part of. And then when we were showing all of this indecision here, although we had this to the downside, it wasn't clear for me because we'd actually got a swing high on the daily, but also a swing low with a daily inside bar. And yesterday, the weekly candle was actually showing signs of indecision. And I was just going through some Forex stuff, which I won't include here because it's not relevant. And then obviously yesterday we actually stabbed down into this. So if you imagine everybody here that was jumping in short that did get this move correct, what we've done is we've actually come back down. We haven't traded into a discount environment. So this is still above the 50%. So we traded down, which has induced a lot of sellers. So now you've got to ask, where is the sell side and the buy side liquidity on that move? So that actually outlined here, so which I shared into the group, and where I've actually got this drawn in as well, this would have been a 9% to here in just over 15 minutes. And the significance of this, I'll actually go in a little bit more detail there. So this is where we currently are at the moment from the analysis that was shared last week within the Discord group. And then if we simply go forwards, so I haven't actually got, where has that gone? Oh, the navigation, they've moved it down here, another update. So here we go. So forward one. So this is daily. So notice what we've done here. So we've actually not traded into it. Well, we gapped down first and foremost to here, and then we've traded up. We've taken the buy side liquidity for continuations long. They've been suckered into the market. And this is the next daily draw on liquidity. However, what we saw is an outside day, which signifies the algorithm, smart money, or whoever it is. What they've done is they've actually cleared both sides of the market. And usually what happens is you can expect some form of a follow through with this. So because we've actually stabbed into this area and we've partially balanced this, I think, buy side imbalance, then we were expecting prices to go lower. However, because we were actually respecting this, we created an inside bar. For me, I wasn't actually too clear on it. I had anticipated a bit more trickery to come up to take the highs before we came back down to close in some of this range. But then, of course, we've had this. So what have we done here? We've actually got a break and a retest of this significant key high, which also ties up with a 50% from premium to discount. So we've basically just tapped into this overall monthly discount area and we've come back off. However, if we draw in this here, which is the daily fair value gap, so let me just make this a bit clearer for you. So daily inside bar. So what we've done is on a daily time frame, we've done exactly what was anticipated. We've come back down to balancing some of this level here. However, we failed to close below the sell side liquidity here. And then what we've done is we've actually closed back up into the range of this daily inside bar. So this now has basically induced a seller trap. And then we've also now got buyers that wanting to take this as a continuation to the upside. And then that is where, here we go. So we've actually now trapped the buyers into the market here who were playing a continuation. And then we've actually closed back into the range. So what I was doing and what I would definitely recommend for you to do is as the week unfolds and you're watching this on the daily time frame to get your DDP and you draw on liquidity, you go back up to the weekly time frame. What are we doing? Well, we're in this pullback here. This is the high to low on the monthly. This is the dealing range. We're back into a premium. We've got all this confluence, but we're also got this bullish order block on the weekly as well. So of course we're going to anticipate a week of indecision. So if I just hide those for a second, what have we got on the weekly? So we are trading back up into this bullish order block. We've got all those other confluences that we've already covered. We've also got this previous weekly high, which means that anybody that wanted to continue going higher, anybody that was looking to short this candle, it's taken that buy side liquidity and it's come back down into this candle here. However, if we want to be trading this lower, we need to be mindful of this level here, but we also need a candle 3 on the weekly time frame to give us that swing high. Okay, so 1, 2, 3. Now, if the third candle closed below the low of all of these candles, then that's full confirmation. An aggressive entry would be to trade this probably Tuesday into Wednesday short, in my opinion, but I wouldn't be surprised if we did actually take out the low on this into this a little bit more and then trade higher here before we come down. So for me, this doesn't have confirmation. So into next week, all the positions that I would be looking to trade will be internal range liquidity pools on the intraday time frames using the 1 hour to frame and add context and narrative to my trade setups. So when we go here to the 1 hour time frame, let's have a sip of water. Okay, so Monday. In fact, let me go back up to the weekly. Extend that out in time, previous weekly high, and then down to the 1 hour time frame. So here we go. So we've actually got a continued move higher. We've pushed up into Tuesday to give the high of the week. And then what we've done is we've actually traded lower here. However, we've come back off the lows quite a bit. So there wasn't a great confirmation here. If you have a look at left shoulder, head, right shoulder, where I shared that this is actually the advanced market structure. This was actually the draw on liquidity. We had that set up ahead of time. So that was really clear. I did actually have a short position from here, or it might have actually been a little bit, no, sorry, it was here. So I was actually short on this candle right here. Let me zoom in. I was short on this candle as a continuation because this was a lower high, higher high, and a lower high. So I saw this as the 1, 2, 3 swing, and I actually got in here right at the beginning of the first opportunity move, but I was actually stopped out before the move lower, and this was actually my draw on liquidity. But what I wanted to do is highlight the positions where they are in the week and add overall context to it. So here's Friday. So the draws on liquidity, the liquidity pools come in various forms, and those various forms come in old highs and lows. They are old previous daily highs and lows, previous weekly highs and lows, previous monthly highs and lows. We have imbalances, and then we also have session highs and lows. So where I was actually talking about the tomfoolery from my previous broker here, basically I was stalking the market, and I'd actually set alerts. So I've got my buy side liquidity, which was the session and day high of the day, and then we'd actually got the sell side liquidity, which was London session. So we've got a London session high and low, which actually took out the Asian session high and low. So the significance of that is we've done an outside move here and here. We've taken both sides of the liquidity. So now both sides of the liquidity reside here and here. So I was anticipating exactly the same behavior when the New York session opened, and we ran this low. And as soon as we actually got to here, my alert went off, and this is what the feed did on my broker. So I emailed them straight away, and they investigated it, and apparently it's because my account has been open for some time. It's actually on server 2, and they are experiencing delays due to latency. What's weird though is no sooner did the move away from my entry position here, okay, in the displacement leg on the micro time frames, 5 minutes and below. As soon as it had actually passed 50% mark, then my broker displayed the data. So needless to say, I've actually left them and I have joined a new broker, and you'll actually see me taking live trades and demo trades directly from TradingView now. So the broker that I'm using actually links in with that, which is great. So we've basically got a sweep on the liquidity here on the micro time frames. We go down to the 5, where we are on Monday. Here we go. So we've run out this high here. So anybody that was short here got taken by that, and then we've come back down, we've taken, and I definitely recommend that you have one of these session indicators and tools on your chart, because what that does is when I see the price run a low, as in this example, and I knew that the initial momentum was to the upside to sucker in those going long, this is where I tried to enter the market, and this would have been 3.2% that I missed out on. Live trading as well, and obviously it all counts, doesn't it? And then what we've actually done is, so this day, Monday, was actually highlighted by ICT as a seek and destroy, which I personally quite like because it's so simple. You see a session high or a previous daily high ran, and you see a market structure shift, then you're just looking for the opposite liquidity, dead easy. So you don't really need even bias, but what you are anticipating is an indecision candle on the daily time frame. So moving in, so this was a really nice move to the downside after we'd got the run on liquidity for the previous weekly high, which is this white line. We'd actually traded below, and we've actually come back down to retest it. Absolutely beautiful, but we ended up trading high out to trade back into fully closing this here, take out the buy side liquidity here, and we actually saw some SMT divergence, and we traded back down, and eventually coming back in to take out some of this, and then we came back down to fully close in the sell side liquidity, and then also further down into that bullish order block as outlined on the weekly time frame. And then this morning there was another lovely move. So here, so if you have been following me for some time, you will already know that for my personal trading model, I require there to be a PD array that we are currently trading off of with time and day that's confirmed on the 1 hour time frame, which is here. So we've got buy side liquidity here for those going break and retest, and they're expecting lower prices. So this here was an indication because we were trading back down into this. This is going to be protected because this has already run stops. So this will be protected here. And then just as New York opens, not only have we got a 1 hour PD array in the form of an old low, which is also nested in a 1 hour bullish fair value gap, we've also got the Asian lows taken out here. So this is obviously a break and a retest, break and a retest, break and trap to go long. And then target 1 would have been here, and then target 2 would have been here because this would have been the dealing range. So this is your external range liquidity, which trades back up into a 1 hour PD array. And ICT has actually pointed this out, and it's something that I've just recently added to my notes. So trading notebook, if I can find it. I'm not going to be able to find it now. I'm just going to keep waiting for ages, aren't I? Well, in one of the latest lessons that I'm revisiting to do more notes, basically it comes back in to close some of the weekly range. So yeah, I'm not going to be able to find it now, but it's very well documented. ICT actually shouted this out on his Twitter today, saying how if the move has predominantly been to the upside, at the end of the week for the close, expect some of that liquidity to be taken. So we've actually got that here. So we've had a relative equal lows. So moving into next week, this is going to be by the end of today, I would anticipate the close to be maybe just above this here, if we get that. So we're coming back down to pairing some of the sell side liquidity from here and here. We're actually coming back in, so that'll be taken here and then maybe up to here by the close of the week, which is actually going to give us a really nice indecision candle on that weekly time frame as we come back in, which would almost be they call it a long-legged doji, do they, or dandelion or dragonfly or something. But it's basically just showing indecision on the weekly time frame. So going into next week, we've got these relative equal lows here. We've also got this, which has been left open. So if I had to be a betting man without having any other price action to choose from, I would say we might come back down to take out these, or we'll trade up higher first. If we come back up to this region, then I like that to come back down to take these, and then maybe to move higher, close in some more of this range, take out maybe this high, or even if we just come and close in some of this imbalance before we attack this here, and then this moving into lower prices. Well, hopefully that hasn't just been a rant. I know there was lots covered in there. I do value feedback, and also it does remind me that people are watching these videos. So please leave your comments and feedback down below. If you have got any value from it, please hit the like and the subscribe button, because the majority of my viewers don't subscribe to the channel. So I'm not going to get too offended, but it does help me grow the channel. And in complete transparency, I'm almost at the point where I can monetize the channel. I've never done that before. that wasn't really my intention. I'm not looking at making money from YouTube. That's why my videos aren't very fancy with lots of gimmicks, because quite frankly, I would rather make money from trading and help other people reach their financial goals as well. So do all the stuff, hit like, subscribe, share the video, all of that necessary stuff. And until next week, catch me in a Discord group in the week, and I'll speak to you soon. Bye.